Having established the importance of fiduciary duties, disclosure, and managing conflicts of interest, it is now essential to identify exactly who is owed these duties in a real estate transaction. In Arizona, a broker's fiduciary duty extends only to the client, the individual or entity who has entered into a lawful, written agreement for representation. This relationship is defined and regulated under ARS Section 322153A and Commissioner's Rule R428101, both of which require licensees to protect and promote their clients' interests while dealing fairly and honestly with all other parties involved. To understand this concept clearly, we must differentiate between clients and customers. A client is someone who has signed a representation agreement, such as a listing agreement for a seller or a buyer-broker employment agreement for a buyer. This written agreement creates a fiduciary relationship, meaning the broker and the broker's affiliated licensees owe duties of loyalty, obedience, confidentiality, disclosure, accounting, and reasonable skill and care to that specific party. A customer, on the other hand, is a non-represented party in the same transaction. The broker must treat customers with honesty and fairness, but owes them no fiduciary duties. For example, when a broker lists a home on behalf of a seller, the seller becomes the broker's client. The broker and any salespersons acting under that broker must protect the seller's interests, maintain confidentiality about the seller's motivations, and work to obtain the best possible sale terms. If a buyer approaches that listing agent without their own representation, the buyer is considered a customer. While the broker must disclose all material facts about the property to the buyer and treat them fairly, the broker's fiduciary obligations, such as loyalty and confidentiality, remain with the seller. This distinction prevents conflicts of interest and ensures that clients receive the full benefit of professional representation. In Arizona, real estate, fiduciary duty always flows through the employing broker, not directly between clients and individual agents. Under ARS Section 32-2155, all agents and associate brokers work on behalf of their employing broker. Therefore, the employing broker is legally the party in contract with the client, while affiliated licensees act as sub-agents of the broker. This structure ensures accountability and supervision, reinforcing the broker's responsibility to oversee the actions of all licensees under their authority, as outlined in R4-28-1103A. To illustrate, consider a real-world example. A buyer signs a written buyer-broker agreement with Realty One Group under Broker A. Agent Lisa, who works under Broker A, helps the buyer locate and purchase a home. Although Lisa interacts directly with the client, the fiduciary duty legally belongs to Broker A and extends through Lisa as the broker's representative. This means that both Broker A and Lisa are bound by fiduciary obligations to the buyer, including confidentiality and loyalty. Should another agent in the same brokerage represent the seller in the same transaction, both clients must be informed of this dual representation, and consent must be given in writing as required under R4-28-1101F. When a broker represents both the buyer and the seller in a limited representation, dual agency situation, fiduciary duties remain in effect, but they become limited by law and consent. The broker must remain neutral, avoiding advocacy for either side, while still ensuring honesty, disclosure, and fairness. For example, the broker cannot reveal to the seller that the buyer is willing to pay more, or tell the buyer that the seller is willing to accept less. However, the broker must disclose any material facts that affect the property's value or the transaction's legality. This careful balance of duty is one of the most scrutinized areas of real estate practice, and violations often result in disciplinary action from the Arizona Department of Real Estate ADRE. Brokers also owe fiduciary duties to their clients in the areas of accounting and supervision. According to R4-28-803C, A broker must ensure that all trust funds, earnest deposits, and client monies are properly handled and documented. For example, if a buyer submits earnest money to secure a purchase, the broker must deposit the funds in the appropriate trust account and maintain detailed records. Failing to properly account for client funds or misusing trust money is considered a severe breach of fiduciary duty and may lead to revocation under ARS Section 32-2151. Another important aspect of fiduciary duty involves the duty of confidentiality. This duty extends not only during the transaction, but also indefinitely afterward. Once a fiduciary relationship is established, the broker must never disclose confidential client information, such as financial capability or motivations for buying or selling, unless required by law. For instance, if a seller once revealed to their listing broker that they were willing to take $20,000 less than the asking price, the broker cannot disclose that information to future buyers or other agents after the transaction closes. This principle, supported by R4-28-1101E, protects the integrity of professional relationships and ensures that clients can trust their broker with sensitive information. It is also important to note that fiduciary duties are not owed to third parties, other brokers, or cooperating licensees. While brokers must cooperate ethically with one another, their primary loyalty lies with their client. This hierarchy of duty preserves the client's best interest and aligns with the fiduciary principles outlined in Barnes v. Lopez, 1985, where the court emphasized that a fiduciary must not put themselves in a position where their interests conflict with those of their principal. In practical terms, this means that a broker must avoid sharing confidential information about their client, even if doing so could facilitate a transaction or improve professional relationships with other agents. Review summary. In Arizona real estate, a broker owes fiduciary duties exclusively to their client, not to the general public or unrepresented customers. These duties include loyalty, confidentiality, obedience, disclosure, accounting, and reasonable skill and care. They flow through the employing broker to all associated licensees under ARS Section 32-215-1.01c and R4-2-8-1101. Brokers must protect their clients' interests, disclose all material facts, manage trust accounts responsibly, and maintain confidentiality indefinitely. When dual or limited representation occurs, fiduciary duties are modified by written consent, but the broker must still act with fairness and honesty toward both parties. Discussion. Who does a broker owe fiduciary duties to in a real estate transaction? Answer. The broker owes fiduciary duties only to the client with whom they have a written representation agreement, such as a listing or buyer-broker agreement. Does a broker owe fiduciary duties to customers or unrepresented parties? Answer. No. The broker must treat all parties honestly and fairly, but owes fiduciary duties solely to the client. Why is confidentiality considered an ongoing duty? Answer. Because it protects client trust and extends beyond the transaction, ensuring that sensitive information is never disclosed even after closing. Closing remarks, understanding to whom fiduciary duties are owed, reinforces the professional integrity required of every Arizona real estate broker by clearly identifying clients, maintaining loyalty, and protecting confidentiality. Brokers uphold both the legal and ethical standards of the profession. These duties form the backbone of trustworthy representation, ensuring that clients receive expert guidance and unwavering advocacy throughout every transaction. A broker's success and reputation rest not on volume of sales, but on the quality of care and faithfulness shown to those they serve.